Welcome to another Forex trading tutorial video on technical analysis here on PeepSciX. This video is brought to you by PeepSciX, and our WhatsApp number is +234-8055-369615. And I, Investor Tio, will be your host for this tutorial. Now we're going to be talking about the consolidation strategy, and what you need to understand about consolidation strategy is that it entails you understanding the concept around consolidation itself. So basically, what is consolidation? Consolidation is literally a sideway market that moves sideways. All right. So what is the market that moves sideways? When we say a market moves sideways, this is what we literally mean. We literally mean a market that is ranging. Yes, and that term some of us use is ranging. So this is what we literally mean by that. All right. So this is literally consolidation is as easy as this. I don't think it can be more complicated than this. Except when you start talking about liquidity and the likes. But yes, as easy as this. Now, talking about consolidation in this way, you can never tell where the market is going to break out from when dealing consolidation. All right, market can either go up. Did I pick that too? Market can either go up or the market can go down. Yeah, it's as simple as this. Now, since we're not sure about the market movements, the market can come in like this. All right, a rally. Then from this base, we are not even sure the base. Remember, there's rally base drop. There's rally base rally. So we don't even know what the market is going to do, right? Because it's consolidating. So what I even advise people to do is to just chill in the market, just relax, don't take trade yet until you see confirmation. Because this is the reason why it's risky to take this trade. Okay. Over here, there's liquidity. We'll learn liquidity later on in the video. All right, in this course. Over here, there's liquidity. Over here, there's liquidity. There are many orders hanging over there. And you, as a retail trader, you don't even know where the market is going to with your small money in the market. Your $10,000 is not moving the market. You get, so basically, even your $10, if your $10,000 cannot move it, is it your $10 that will move it? No. So what you have to do is just play safe. This kind of situation, you might want to skip it. See, don't get me wrong. Some people actually trade consolidation and they make a lot of money from it. They break, retest, and move. Even the last Bitcoin move was almost like this, almost. Right? But yes, some people trade consolidation to move with it. Right? Because consolidation on its own is a good thing when it acts as fuel to move price in your desired direction. So let's say you took a trade. Let me take this to the center. Let's say you took a trade, a buy trade, a long trade, this long position. Okay, and your trade was activated somewhere around here. I don't think you might find anything to do here. Somewhere around here. For instance, this is your long position too. Yes. So this is your long position, right? And you take your position from somewhere around here. Your tight stop loss, not too tight, please. Give breathing space because there's liquidity and everything, right? And you're targeting going up. This consolidation on its own, if the market wants to give you profits based on what is working with, the market wants to give you profits, the market will shoot all the way up, all right? And then you can hit your huge TP. You get the point. The market can come and hit your huge TP here. And this is a 1:8 RR. I work with 1:5. Okay, because I've backtested it. I spent time backtesting the market with my strategy 1:5, which we learn as keep on going. But yes, with 1:5, we'd have milked this trade successfully. Okay, this is because the consolidation acted as fuel to push price to direction. But taking of this, but this same consolidation can also make price come down, hence hitting your SL. But the 1:5 trade, to me, I might not be scared about entering the market with it because I know even if I lose 4 trades and I win just one, I will still be in profits. That's how crazy 1:5 is. Right? Even if you lose 4 and you win just one, you will still be in profits. So that's how 1:5 works out. Okay. So basically it's just insane, especially when you understand how risk reward ratio works. But I don't want to move it too fast because we're going to talk about this in another video, right? Towards the end of the series, so I can understand risk management properly. So yes, this is one issue with consolidation strategy, right? There's another thing about consolidation that is also need to know. Let me give you an option example. And once you know it's time for you to close a trade if you're currently in a trade. So here's my part 2. Let's say again we are going up, market forming higher highs, this higher highs. I think this 2 tick is on 2 tick, like times 2, or let me check this. But let's just continue to start with it. This market forming higher high, right? This is an uptrend, clear example of an uptrend. Then you see the market doing something like this. Market then comes down, right? Instead of coming to do its normal uptrend thing, market goes like this, comes close like this, and starts consolidating, like almost equal highs and equal lows, EQH and EQL in markets. You learn this later on. Them not move too fast, and then you're not sure of whether the market is going to go up, market is going to come down. Now, most times, what the market will do, or let's use the word sometimes, the market can come straight down to your order block over here and then take the market all the way up from here. I'm going to explain this clearly so you can understand. Consolidation is not necessarily a move I like working with, but I just need to explain for you to work with it. Okay. Now, this is consolidation move over here that I'm talking about. The advice main traders want to give to you if you're already in a trade like this is to close your trade. All right. If you've entered the trade, let's see from with this other block over here, there's an other block somewhere here, and you use this to enter a buy position. You're targeting your lamba at the top. All right. That mention lamba. You're targeting your Lambo at the top, your Lamborghini, your okay. So let's get it straight. Now this is the chart, right? And let's say you're already in a position from here with an order block. I saw some of the markets just correct you've entered. Then you enter the buy position. This is a long two, this long two. Okay. I think it's too far, so let me just yes. So this is your long two over here, right? And I take it yeah, this is your long two. And you're targeting a trade of what is this? 1:5. Good, 1:5 arrow. Like my 1:5. So this is my 1:5. Now after the market came all the way to up to 1:2, its market came down back. Right? I don't close my trade. I just leave it to run. Sometimes majority of the times I leave it to run. I hardly do that break even concept, but something I'm thinking of incorporating to my trading plan once I analyze it properly. Right? But at the time of creating this video, right, the 1:5 is still 1:5. It either hits TP or hits SL. So basically, this is how this works. Market has pushed all the way up, okay, because of the demand zone that was there, I took it all the way up. Now it came down. So to push all the way up too, right? But this is what you have in market: consolidation, 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 consolidation. If you are not sure of where the market is, or if you don't have a good account size, or if you over leverage to enter this trade, at this point you're in profit, right? It's still best for you to close your position. If you are someone that just overtook risk and you're already in profit, close your position because this is an indecisive movement in markets. There's liquidity at the top, there's also liquidity at the bottom. Liquidity is noted with the money logo. So this is it. This is the liquidity over here. This is liquidity over here. I'm going to clone it and then take the liquidity to the bottom too. So this is liquidity at the bottom too. This is as simple as this. And despite this is a dangerous sign, we don't know what the market wants to do. All right, you can hold onto the trade if you have a good arrow risk reward, because you know even if you lose four and you win one, you're still in profit. That's still good to go because you know the market is going to do something great for you. So, but if you don't want to risk at all, you close your position. This is an entry mode you're going to learn later on because of the liquidity here. The market is going to induce itself over here. So there's liquidity at the bottom, right? There's also liquidity at the top. So either ways, if the market comes to take the bottom liquidity first, okay, this other block over here, I'm not supposed to be doing this right now, but yes, this other block over here, I work with the weeks of the weeks in the markets directly. So the market comes over here to work with this liquidity. It picks up market over here and then it takes it all the way up. Okay, so you can clearly see the liquidity over here directly at the bottom. So the market comes to the bottom, take the liquidity first. If it triggers my entry, because my entry is more of a sniper move, although I give my SL breathing space, but yes, I want to take market from the least part, almost the least part. Sometimes I miss entries based on what I've backtested in markets. But yes, it gives me more refined entries in the market. So basically, let's say the market comes to my sniper entry zone and enters. Okay, snipe into the market. Let me see if I can get this properly here. Just snipes into the market properly. Okay, so if the market snipes into the market and wants to go up, we know that's cleared this bottom liquidity. And once it clears liquidity, sometimes it moves in the opposite direction. All right, so that's clear liquidity. Remember, I was now uptrend initially, uptrend, higher highs and higher lows. Do I need to start writing breakout structure for you? You should know that this is a breakout structure. This is a BOS over here. BOS, breakout structure, and just like that, BOS. And yes, the breakout structure also occurs at the top again before the whole liquidity game started playing out. So this is another breakout structure over here. So you can see we are seeing a clear uptrend. Although this is a low, higher low, right? The market didn't go beneath it, just clear liquidity over there, and then continued its normal uptrend. Yeah. So this kind of situation, someone like me, let me delete this first. In this kind of situation, someone like me would have hit TP comfortably because I took the risk of entering this trade, understanding the concept of liquidity. Now, I won't say it's a real risk because liquidity helps us understand how inducement plays out. This liquidity induced price to come down to this other block, take orders from here, and kept on moving its trend. I work with clear and precise trading plans, and if they work out in markets, I mean from good profits. So I've been using uptrend example. Let me just do a downtrend example, and then wrap up this video over here. Okay, so I've used this video to show you how liquidity can be in your favor, and how liquidity cannot be in your favor is the other way around. If you have the buy position, it just comes down and hit your SL. So that way it's not in your favor. But if it's in your favor, it taps your other block and you move up. And let me show you an example with the downtrend over here. So the market comes down, goes up back, comes down, goes up. Now there is another block somewhere here, right? Where we are usually looking for us to short the market to ride this trend. Right, and we actually enter our other block. So let me just pause this here, and we enter the other block over here. Yeah, we're currently in this trade. We entered the other block. We got triggered to enter this other block, right? Now, after getting triggered with this other block over here, you learn the concept of other blocks and the likes properly as keep on going on, right? But after getting to this point of our other block, okay, and we want to shoot the market all the way down, we also observe that the market, instead of continuing to move down, it comes up back, and starts forming these consolidating moves over here, risky consolidating moves. So we're not sure of what the market is going to do. So at this point in time, we're not sure if the market will move all the way down. We're not sure if the market will move all the way down to continue the original trend, or if the market will come up from here to hit our SL. So we're not sure. At this point, majority of the traders are scared, and some of them will actually close. At the time of creating video, I even saw this on Dogecoin today. Is it Doge? Yeah, Dogecoin today. After getting to the $0.4 zone, it started coming down, up, down, and I saw the consolidation for my 1 hour time frame. It should be 1 hour daily time frame. I checked it out, where I saw these clear concepts. So we are not sure whether the market will continue going up because it was in an uptrend then. But yeah, this is what the market is showing here. We don't know whether it's going up or going down. With your 1/5 arrow, I'm not usually scared about this. I can hold through the market and see what's going on. But with you right now, I don't know what you're using as your arrow. You might want to close and wait for the market to give you another entry. I hope you get, because if I had entered somewhere around here with my sell position, short position here, all right, and my SL is over here. My SL is usually 5 pips above the other block, 5 pips above the other block for Euro USD. If I'm trading on Euro USD, it's 5 pips above the other block. All right, when we go to other concept, I'll let you know how to arrange it. But you can just say, oh, your SL is a few pips above the other block. That's the way of still putting it. You can, it's not necessarily just 5 pips. You can create your own, go to the market and study your charts and know what you work with. All right, why my TP is 1/5. So is either the market hits my TP successfully or hits SL. It's as simple as that. Okay, so at this point, I believe I've been able to explain full way how consolidation can be used to your advantage, or how it can actually take you out from the market. Okay, this consolidation strategy is very, very basic. I need to understand it properly. All right, so if you actually gained enough from this video, you know what to do. Do what to hit the subscribe button, like this video so our YouTube can push the video out to other traders that still want to learn, and also share this video with others that you know directly so they can learn and grow from this community. This is SMC, and I believe you are here to profitable too. You can use the link in the description to join us on our Telegram community, on our X handles, and even sign up with our broker so you can grow with us. I'll see you in the next video, champs. We'll be talking about the break or structure, change of character, and your SMS, that is shift or market structure. So you can understand this concept better. All right, cheers.